Hello friends, welcome to the Block Thrasher Daily Morning Crypto Update, where we are shattering the complexities of crypto with news, commentary, analysis, and education. It's another exciting day for cryptocurrency. Let's jump right in and take a look at the market. Bitcoin is currently $51,975, up 6.60% in the last 24 hours. Bitcoin looking good. As you can see, we actually are seeing green all across the board. This is phenomenal. Ethereum is finally taking off again. It is $1,628.56 now, up 4.48% in the last 24 hours. Cardano is up 2.24%, currently $1.25, up 20.92% in the last 7 days. Binance Coin is up just slightly, up 0.35%. It is now $249.85. Polkadot has had a decent week. It is up 6.71% in the last 7 days, 4.66% in the last 24 hours. It is now $37.78. XRP is up 3.16% to 45 cents. Litecoin is up 6.33%, $191.58. Chainlink is up 10% for the week, up 4.95% for the last 24 hours. Currently, $30.81. Rounding up the top 10 is Bitcoin Cash, up 1.46%, now $542.25. And that will cover the market overview and prices for the day. Moving on, some good news for adoption. Kentucky, the state of Kentucky, wants to attract more cryptocurrency miners. Kentucky is going to provide tax breaks for local crypto miners. Kentucky needs to attract more crypto mining businesses by offering tax breaks, say the local lawmakers. This is incredible. This is a great thing to see. I like it. Another state that is becoming crypto friendly. Obviously, we know that Wyoming is one of the most crypto friendly, and now Kentucky is taking steps saying we are going to give sales tax breaks to operators of cryptocurrency mining companies. Incredible. Kentucky lawmakers on Tuesday approved several state tax breaks, including House Bill 230, which would remove the sales tax from electricity purchased by local crypto mining operators. According to a report by the Lexington Herald Leader, Kentucky legislators voted 19-2. That's a pretty good overwhelming vote for. The bill's fiscal note is reportedly estimated to cost the local budget at least $1 million annually. The exact cost cannot be calculated so far because it is unknown how many of the businesses might choose to locate here to avail themselves of this exemption. Good stuff. There's news today about Graph. And we've been talking a lot recently about this move towards interoperability within the cryptocurrency space and becoming chain agnostic, and this would be another good example of that. The Graph is expanding to the Binance Smart Chain. The Graph is an indexing and querying protocol for the Web3 ecosystem. It has added support for Binance Smart Chain. Binance announced the move via its blog earlier today. The Binance-owned chain is now integrated in the protocol, allowing developers to create application programming interfaces. These APIs, referred to as subgraphs, can be used to index and query data from a specific network. Creators of the subgraphs then earn a fee. The Graph's incentivization mechanism is made possible by its native token GRT. And the Graph is definitely one to take a look at. Similar to Chainlink, it's not an oracle, it's a little bit different, but these are interoperable, chain agnostic platforms that I think will do much going forward. And so searching for data on-chain and off-chain can be very time-consuming. By acting as a data search engine for blockchains, the Graph helps projects move forward towards interoperability. The best-ranked subgraphs are used by many of the Web3 stable projects, including Uniswap, Aave, and Synthetics. After launching with support for Ethereum, the Graph recently expanded to Polkadot, Near, Solana, and Celo. At the time, the team confirmed it was looking at integrating Bitcoin, Cosmos, Avalanche, Binance Smart Chain, and Flow. So see what I'm talking about? This is incredible. Chain agnostic, working with all those different platforms. Good stuff. Very good stuff. Talk about just, broadening the horizon, and with all this connectivity to all these different platforms and all these chains, this can be very good for a project like the Graph. With Binance Smart Chain already ahead, added, one of those shortlisted could be up next. Good stuff for the Graph, right? Now, non-fungible tokens have been hot of late. Everybody's talking about them. Here are some core characteristics to understand. right? The idea of partial or fractional ownership of certain assets, such as equities, securities, is nothing new. But the rise of NFTs has the potential to revolutionize this sector. There are certainly some products, such as CryptoKitties, that might strike some as more of a joke than a legitimate enterprise, but that misses the wider point. Blockchain and crypto are rapidly becoming mainstream, and new ideas are a natural sign of this maturation. This all sounds well and good, but what are some of the use cases for NFTs that can create outside of collectibles and certain benefits connected to video games? It's important to note that there might be some signs of froth in this sector, with millions of dollars being spent on various sports video clips. It remains uncertain what will happen to the currently publicly available versions of these same clips. Framed against a wider backdrop, though, of increasing digitization and automation across the economy at large, there are actually quite a few use cases for NFTs. Clearly, the creation of digital or crypto collectibles or assets is the application that has seized the most attention, but this is just the tip of the iceberg. Any intellectual property, artwork, content, or other digitally based information can be secured by the blockchain and NFTs, enabling content creators and owners to maintain control and custody, and also receive compensation that can be accurately and transparently calculated. With high flyers such as William Shatner and Mark Cuban, among many others, actively participating in the NFT space, this entire conversation continues to generate buzz and excitement on almost a daily basis. And I've been talking about this a lot lately on the show. I believe NFTs are going to attract a huge, massive amount of attention to the cryptocurrency space and help bring even greater adoption as we move in the direction toward mass adoption. So what are some of these unique characteristics of an NFT? Well, number one, they're unique and indivisible. Every NFT is unique. And unlike a typical cryptocurrency, a coin, a Bitcoin, a token that is fungible, where one is the same as the other, where you can trade them equally, and they have all the same type of functions and the same value and that sort of thing, NFTs are not. They are unique, and they are also indivisible. Every NFT, it means that unlike Bitcoin, these crypto assets cannot be subdivided and have these portions used as transaction tools. So they are also asset focused, right? There is a debate going on in the marketplace as to whether or not cryptocurrencies will or how they will eventually move to supplant fiat options as a primary medium of exchange. NFTs, generally speaking, are designed specifically to serve as assets and represent value versus serving as a widely used medium of exchange. NFTs also allow for smart contract expansion. The uniqueness of NFTs is delivered by smart contracts, an executable set of programmable code integrated into an underlying blockchain, and in this case crypto assets, that verifies the uniqueness of these crypto assets. Specific and multiple. Since every NFT is connected or linked to a specific asset, be it digital or physical in nature, these assets can provide a traceable, transparent, and blockchain secured proof of ownership, as well as delineating rights to dividends, royalties, or other multiple payment arrangements such as annuities. This holds tremendous potential. So when an artist creates an NFT that then gets sold, it can be tracked. There could be a scenario where someone else could then sell that NFT, but the original artist could still get a royalty for it because of the smart contract capability and the blockchain that is tracking the buying and selling of that particular asset. Now that is incredible. Royalty is going to be a huge aspect with implications that are going to be phenomenal for artists and for users alike, and for value to be just accurately, transparently recorded moving forward indefinitely into the future. And that this is really, when you wrap your head around what that actually means, it's actually a big thing. So we're going to continue to see this space within cryptocurrency just explode and expand. This NFT, I'm sure we're going to be talking about NFTs a lot more moving forward into the future, and those projects which are coming to the forefront in the creation of NFTs and also in the selling of NFTs, obviously. And I think one of them, we've talked about it a bit, and we'll have a little bit of news about it today with Cardano. Cardano has recently just exploded in terms of people searching for it on Google and whatnot, but they're going to make it simple for people to create NFTs on their own, just like regular people have no programming abilities or anything, to use the Daedalus wallet and the Yoroi wallet to create these NFTs, and then they can sell them in marketplaces like Bondly or Ocean or others, right? So this is an interesting story here. Now, we've seen a lot of people sort of within the gold and silver space talked down Bitcoin over the years, slowly, one by one, though, they are starting to warm to the cryptocurrency and the Bitcoin space, and we're seeing that with another, and that is with veteran investor Jim Rogers. Jim Rogers is now saying that he regrets not buying Bitcoin, but also fears regulation. So the 78-year-old hedge fund manager Jim Rogers says that the current market is reminiscent of the 1960s bubble. He said that stock and bond markets are in a bubble, with many retail investors getting involved through online apps. Rogers recommended gold and silver and regrets not having bought Bitcoin. I wish I had bought, this is his quote. He says, "I wish I had bought Bitcoin," said 78-year-old investment manager Jim Rogers, as he suggested a bubble in stock and bonds. Okay, we already mentioned that, right? So Jim Rogers, the co-founder of the Quantum Fund and Soros Fund Management, which holds $5.2 billion assets under management, said that the stock and bond markets are in a bubble. According to him, too many people are getting involved with stocks. Making money via stock investment has become easy and fun, which is an alarming signal, he added. And obviously, he's probably talking about the Robinhood and the Webull and that sort of thing. So he says, "This isn't my first rodeo. I've seen this movie before." To Rogers, Chinese stocks are more interesting because they're cheaper and quick rehabilitation from the corona. And in China, we're seeing a quicker rehabilitation from the coronavirus pandemic. Although it is interesting, we're starting to see states within the United States, Texas being one of them, that in a couple of days, I think it's on the 10th or the 12th of March, are lifting all coronavirus restrictions, mask wearing, everything, all across the state. And we've seen that in other states as well, that we're moving in that direction. I think people are just starting getting to the place where it's like, it's time. We have to go about life. We can't continue to destroy the economy, etc. We just, and businesses and people's livelihoods and that sort of thing. So the hedge fund mogul expressed regret for not buying Bitcoin earlier. He sees a unilateral focus on Bitcoin and cryptocurrencies among many that have disappeared and gone to zero. All right, Dan Larimer is in the news again. I told you guys that I was going to introduce new people to you on a regular basis, sort of OGs within the crypto space who have done important things or are important figures to know about, and Dan Larimer would be one of those. Dan Larimer is a software programmer and entrepreneur who played a role in the creation of multiple blockchain projects, including Steam, like going way back, right? So there was Steam, there was BitShares, and then EOS. Larimer is the creator of the Delegated Proof of Stake (DPoS) consensus model, in which elected delegates validate transactions and create blocks, which is a significant thing, right? He's also the chief technology officer of EOS.io and creator of Block One. So he's come out and stated that he's working on a new project, which is called Clarion. This is going to be a communication platform. He's sure that this peer-to-peer service can replace Twitter, Facebook, Medium, and even email. So it's basically a messaging communication app to replace legacy systems like Twitter, Facebook, Medium, and even email. He's calling it a layer 0 for peer-to-peer messaging, and says that it does not need an app store and Google Play. Now, basically, what happened was that we saw things shut down, such as Parler, and so Larimer is now coming out and saying that he wants to create alternatives to these platforms, that an alternative, a blockchain-based, decentralized alternative that will keep that from being a possibility. That will be, decentralized and unable to be shut down, censored, etc., that sort of thing. Now, here's the thing about this. Dan Larimer is clearly one of the OGs, clearly very smart, brilliant guy who has skills. That being said, he also has this pattern, this history, a record of starting projects and leaving and bouncing, and those projects end up going bad or awry or never performing as they were intended to. And we saw this with BitShares. We saw this with Steemit, which then he left and then got taken over by Justin Sun and Tron, and then, so people then left that and created Hive and others to replace what was happening there, and BitShares, and on it goes. And so I, for one, without going deep into all of that, maybe we'll cover all of that history at some point in time, but would be very leery of anything that Larimer does, actually, because of his track record. And so, but that's not to say that he might get something right and pull it off this time. I think overall, from a technological standpoint, he's invented, and he has some incredible things that he does, but the problem is just sort of sticking with it and and then just sort of slowing down and taking the methodical approach and making sure that everything is done right instead of just like rushing stuff to market, moving fast, breaking things. It's like you just can't do that in the cryptocurrency space and end up with a good product. So that's just a little bit of a warning there, but that might be something to pay attention to and look at what's going on there with Clarion. All right, I was talking earlier about some of these people that are sort of a long time gold, real money, Austrian economist type of individuals who, for the most part, I really appreciate and like, and they have so much good stuff to say about the Federal Reserve note and how our currency works and that sort of thing. Jen Rogers being one, we talked about him. Well, another is Peter Schiff, and Peter Schiff for the longest time has been one of Bitcoin's most vocal, what's the opposite of an advocate? He's been, he's not spoken well of Bitcoin, right? And a proponent against Bitcoin. So, Mark Cuban came out this week speaking to him because Schiff was just doing his normal thing, and so he, according to this report by Cointelegraph, Schiff looks increasingly isolated in his Bitcoin hating as former skeptic Cuban tells him to move on from gold. Right? Bitcoin, BTC, and Ether are empowering, but gold is dead, according to billionaire Mark Cuban. So he told one of cryptocurrency's biggest naysayers. That's the word I was looking for, naysayers. Yeah, forgive me, guys. Sometimes when it's super early in the morning and I've just been crazy busy, as I have been, getting another podcast ready last night, my brain's just a little bit slower and the words don't always come. Anyway, in a Twitter debate on March 2nd, Cuban, who has become increasingly sympathetic to crypto, warned Peter Schiff that gold will die as a store of value. Cuban Schiff to gold. He says, gold is dead. Move on. Schiff, a gold bug who has long made a name for himself as a firm Bitcoin skeptic, continues to tweet disparaging comments about the phenomenon despite BTC USD regularly hitting new all-time highs. Responding to remarks about Wall Street firms being dumb by buying it, Cuban offered a dose of surprisingly pro-Bitcoin medicine. Yeah, so this is what happened. Peter Schiff goes on Twitter and he says, these Wall Street firms are just dumb for buying crypto. And so this is what Cuban says to Schiff. He says, let me help, Peter. Gold is hyped as much as crypto. Do we really need gold jewelry? Gold can make you a ring. One tweet that he says, BTC and ETH are technologies that can make you a banker, allow friction-free exchange of value, and are extensible into an unlimited range of business and personal applications. Continuing, he gave a stark verdict on the future of gold. This is Cuban. He says, what we are seeing built with crypto today is just proof of concept. As tech continues to get better, cheaper, faster, there will be new applications and maybe even something that supersedes what we know as crypto today. For the post says, but gold won't ever change, which is why it will die as a store of value. Cuban had formerly given little time to Bitcoin and cryptocurrency technology more broadly, sparking a concerted effort among proponents to persuade him to reconsider. In January, he revealed that he is still had holdings from years ago, which he never sold. So people have given Cuban a lot of crypto, and he's just kept it the entire time. But yes, I would say I heard him in a long interview the other day. It was like 2 hours long, talking about, and he is definitely on board. I'm so much so that he stated that he's even now learning the Solidity smart contract programming language for Ethereum, because he wants to understand it better, and he is super excited about the NFT space and what that might mean, which actually it's interesting because it has some correlations to some of his businesses in the past with the streaming of sports events and things like that. And so he sees value, and obviously he's one of the best and most brilliant in that regard. So he says this, and this was, I thought, very interesting. Don't forget, gold was a store of value built on technology. From picks and shovels to mining operations that keep trying to improve, whoever could use the tech of the day to find and mine the most efficiently was the most rewarded, much like crypto is today. A final message to Schiff concludes. Gold is dead, Peter. Move on. Now, I tell you what, this might become sort of a barometer of when we know that crypto has reached mass adoption, is when Peter Schiff finally says, all right, I give up. I'm in. I'm buying Bitcoin. Now, maybe that will never happen. Some people can just be stubborn and obstinate. So we shall see. But I tell you, if that does happen, we'll sort we'll probably know that at that point in time, it's like it's just indisputable. Like, So anyway, going back to Cardano, mentioned it just a little bit earlier. Cardano Google searches are at an all-time high as retail investors come for ADA. ADA's exploding price is not the only metric flying high lately, as the worldwide Google searches for Cardano have gone for a new record. Retail investors appear to have flooded the third biggest cryptocurrency by market cap, Cardano's ADA. Google searches have skyrocketed to new highs in the past few weeks, coinciding with the latest price record for the ADA token. There's not much more to that story. That's just a little bit of an interesting fact. Well, friends, that's a wrap up for today. The Daily Morning Crypto Update for March 3rd. I thank you so much for your time. It's good to have you here with me. As always, remember, it is a great, great day to stack more crypto. Thanks, guys. Talk to you soon. Have a great day. I hope you just have one of the best days you've had in a long time. Bye now.